Well, there is a lot to discuss today, and I'm very excited to bring our guest on for a very in depth, interesting conversation crypto and energy and Elon Musk. Harris Fricker is joining us. He is the president of Stifel Canada. Harris, great to be with you today. And also, as you said, you're the internet OG, the original. You're back in Silicon Valley as well as Bay Street, Wall Street for so many years. So thanks for joining us today.
Thank you, Catherine. It's great to be here.
Thanks. I want to first start out, and I'm asking a lot of friends these days, do you know much about FTX, the collapse, $32 billion that went down to zero? Sam Bankman Fried, the founder of it. And some people kind of maybe hear it, but it's almost complex, but it's not really. I want to talk about this and understand what actually happened because billions of dollars have been wiped away. And these were institutional, sophisticated investors, let alone retail investors as well. So what's your take here?
Well, my take is that it's both fairly complex, and with most things that are fairly complex, as you drill into them, they're actually fairly simple. And this was originally a failure in financial engineering, which shouldn't be surprising because in crypto, math and code replace the intermediary. And obviously, if that's the case, then the code in the form of a smart contract or an algorithm has to fully contemplate cause and effect. And we've got legions of examples in financial markets history where we thought algorithms contemplated cause and effect. Think back to long-term credit in 98. And, an algo or a smart contract is good till it isn't. And really what happened was on the stablecoin front, we had an algorithmic stablecoin in Terra USD fail. It had an interesting arrangement with a sister coin, Luna, where it was basically maintaining a peg to the USD via either buying or selling its sister coin, Luna. And ultimately, traders lost confidence in that trade in April, and we saw $40 billion of market cap wiped out as Terra and Luna decoupled and went to zero. So really, that's about financial engineering, and you simply have to accept that that's part of distributed ledger technology, and it will evolve over time. The algorithms will get better as
Hmm.
AI and richer data come to the fore. So that's the first thing. The second thing is when Terra and Luna collapsed, as most people in finance would understand, that went to collateral. And as we all came to realize, there were an enormous amount of loans and cross-party transactions that were underpinned by tokens, the value of which was very lofty. And when Luna came off and Terra, you had a lot of people holding those tokens as collateral, and the collateral collapsed. So you had
Hmm.
the old thing called margin calls. And the original margin call in the FTX world was to Alameda Research, which FTX owns about 90% of, which is a prop trading house. And Alameda, when Terra and Luna collapsed, Alameda had a massive margin call. We tracked it on blockchain and saw the transfer of about $10 billion from FTX to Alameda.
Hmm.
Subsequently, it's been stated that 4 billion of that 10 billion was customer funds that were commingled. So we'll see whether that is in fact true. But that was the genesis, was a collateral breakdown, and then there was a little company in Singapore called Three Arrows that had invested very heavily in the ecosystem, including Luna. Three Arrows had large loans from lots of the major players in the space, and
Hmm.
Three Arrows experienced a massive margin call, which it couldn't meet. When it fell, then we saw the dominoes fall.
Hmm.
And that's really where we got to FTX coming in as kind of the Fed and backing some of the entities that were offside. And that was through the summer of 22, where, in many instances, Sam Bankman Fried was being likened to J.P. Morgan back at the collapse of the markets in the early 19 or early century. So
Yeah. But Harris, he obviously wanted to. He wanted to be that person to come in and save the day, which he did, and we were all kind of taking a breather. When there's a lot of volatility in the cryptocurrencies, and he came in, he caused some stabilization. But did the ego get ahead of what they were actually capable of? because they didn't seem to have the money to be able to do this. And to your point, they commingled. We're going to take a quick break. We'll be right back.